Alright, here is an overview for the basic functions for Tradingview for looking at stock charts. Alright, on the right here, we have our watch list. Our watch list shows the stocks that we've favorited or bookmarked or put on our watch list. So we have a category here for what you own right now, the SPY, Bitcoin, gold, etc. And then if you scroll down, or mouse wheel down, you got some maybes or suggestions that you might want to look at, such as JEPI or XLV, which is healthcare. So the 3 or 4 letter symbol like XLV, that's what they call the ticker. That's kind of like the code for the stock or the ETF. You'll also see it up here in the top left, and it'll give you a fuller description of what it is right below that box up here in the top left. It says Healthcare Select Sector Spider Fund. So if we go to like the SPY, changes to Spider S&P 500 ETF Trust. And here's the chart for it. So the way we look at stocks is there's multiple ways. One, we could just click on one with our watch list. Like I'll go over here and I'll click on gold, GLD, that's an ETF for gold. You see that the chart changed. You'll see that it says Spider Gold Shares up here, and it gives a ticker again in the top left, gold. So one way is you could just click on something on your watch list to get the chart for it. The second way is you click up here in the top left where this little search magnifying glass is. You click in there and then type something that you're looking for. You know the ticker, you could just type it in, GLD for gold. But maybe you want to look at gold per ounce, so you can just type the word gold. And they'll give you a bunch of options. Here's gold, US dollars per ounce, gold futures, etc. So there's a bunch of them. So we're going to look at gold per ounce. We could click this top one here. That's gold per ounce. It's currently $4,200 per share. So let's go to that. On the right hand of the chart, that's the price of each level. So it'll usually draw a line here, a little dotted line to where it's at right now. And then it'll highlight the price that it is right now, 4021. You can also see this price, 4021, the current price, in the bottom right-hand corner. Gold, 4020 here. All right, so let's do another one of those. Let's say we want to look at Walmart. So we could either just start typing things in the keyboard, or we could click up here in the top right again, the symbol search. And if we know the ticker, we could just type it in, WMT, and then either hit enter or select it. But if we don't know the ticker, we could just type in the word Walmart or start typing in the word. And then you want to click the one that looks like the one you want. These both say Walmart. The way you could tell the one you want is that'll usually be the top one, but that's not the case here. You want to look at the right here. There's a stock, NYSE, New York Stock Exchange. You usually want that one, the New York Stock Exchange one. So you click on it, and it brings up the chart. And the current price is $103. You see that on the right. You can also look at the box in the lower right. It's $103. That's the price. And shows the ticker up here in the top left, WMT. And it tells you what it is here right below it. Walmart Incorporated, New York Stock Exchange. All right, so that's how you find a stock. You might type in General Electric. That's not General Motors. So their ticker is GM for General Motors. You could click on that. See, it says New York Stock Exchange, NYSE. So that's what you want. That's General Motors here. There's three ways to change the number of weeks or how long you look at the chart. And the first one is to scroll with your mouse wheel. You can scroll in, or you can scroll out. You have dates on the bottom. There's 2022, 2023, 2024 in months. So that'll tell you where the stock was at. Each one of these candles is a week. Got a W up here in the top left for week, or you could change it to daily candles. Each candle is a day. So you can scroll in, scroll out. The second way is you kind of move your mouse towards the bottom of the chart screen, and then this will pop up. This minus, plus, left arrow, right arrow, and then like a reset. So if you mouse down there, you can hit the minus button to zoom out, and the plus button to zoom in. The third way, you can change the dates that you see, how big of a chart you're looking at. It's at the very bottom left. It says 1 day, 5 days, 1 minute, 1 month, 3 months, 6 months. So let's look at the year to date, YTD. That'll show you what GM's done this year since January 1st. Remember on this, you could change it from a daily candle or a weekly candle. So we go to year to date, there's GM. Go 1 year chart, or what I like looking at, the 5 year, or even all. Get a big old chart on it. So I usually default to about a 5 year chart. Here's GM on a 5 year chart. So once again, we get about 3 ways to look at stocks and find their tickers. We can click up in this box and say Amazon. And we like the one usually that says NASDAQ or New York Stock Exchange. Here's the Amazon chart. We go to 5 year look at it, or go all to see a bigger chart of it, all the way to the 1990s. I generally like the 5 year. Then we can switch, as I mentioned, between weekly and daily charts. And if we like a chart, if we like a symbol, we want to watch it or keep our eye on it, or if we already own it, let's try one we don't have in here. Let's just look at, say, eBay. So I can type in the word eBay. That's also the ticker. New York Stock, NASDAQ is good. New York Stock Exchange is good. It's probably always going to be one of those two if it's a stock. So here's eBay. We're going to go to the 5 year chart. Remember, each candle represents a week. We have a week selected up here. And so if we wanted to add this to our watch list, there's a couple ways to do this. The way I do it is you right click on the screen, but you have to right click on the candle. So move your mouse over a candle, any candle. Right click to bring up a menu. Then you go all the way towards the bottom here. It says add eBay to watch list. And then you want to check this box here for watch list. Boom. So now we got eBay on our watch list. And then we can hit this trash can to get rid of it. The second way, that's how I do it. The second way to add it to your watch list, let's see if I could even remember how to do this. I think you go up here to the top right to your watch list, hit this little plus button, add symbol. Then we could type in eBay, find the one that says NASDAQ or New York Stock Exchange, and then we hit this little plus button. Plus button adds it to watch list. So we're going to click that, and then we're going to X this out, and there's eBay in our watch list again. All right, so we know how to find tickers or symbols or stocks. We know how to add them to our watch list. We know how to remove them from our watch list. We know how to change the chart from daily candles to weekly candles up here in the top left. We know how to see 1 year's worth of the chart, or 5 years worth of the chart, or all that it has from the chart back from the 90s on eBay here. So now let's just look at a couple of our tools, and I think that'll do it for what we need for the basic stuff. So I'm going to go back to a 5 year chart. So I favorited 3 tools here to use. That's in this little kind of box here. First one, 2 lines with an up arrow. That's the price range. So maybe you want to know, okay, see this crash in 2021, 22, the bear market of 22? How far did eBay fall? So instead of just looking at the price and saying, well, it went from $75 to $34, and then doing math, you could just grab this tool here. You click it once. You click it where you want to start measuring. and then you move your mouse to where you want to stop measuring, and then you can click it again, and that will the price range will stay. It says down here is minus 54%. So eBay lost 54% in the 22 bear market from top to bottom. If you don't want this blue thing, this measurement on here, you can click this trash can, kind of in the right, top right, remove. And if that's not on there, then you could just click somewhere in that kind of shaded area where the lines are. So I'll click here, and then I'll bring up this little box here, and then you just hit the trash can. The other tool we got is this second tool here in this little box in the top left. This is the horizontal line. It'll just draw a straight line for you. I don't see any great use for it here, but we could put it at this top here and just say that's a significant level. So let me start over. I'm going to click on this horizontal line tool once. I'm going to click it where I want to set it. I'll put it at the 2021 top. I'll just draw a horizontal line from left to right on the whole entire chart, as far as you go back, as far as you go forward. You might want to say, that's an important level. We could see if we ever get above it and we start going down, like we did here, we broke above that level. We come to what they say, retest it. That's probably a good place to buy. And it was, in this case. Or in our current markets, we could grab this tool and say, we had a whole bunch of lows here. We came and bounced here, we bounced here, we bounced in the same area. So I'm going to draw a line there to say that that's a significant level. And so maybe if it ever comes down to this blue line again at like $88, we'd want to buy. So we can put those horizontal lines on there and mark significant levels. We might want to mark these lows in case we have a bear market in the future. This is a good time to buy before. It might be a good place to buy again. And once again, if you don't want these lines anymore, you can just click on the blue line. It'll open up this little toolbox when we hit the trash can icon. Click on this blue line and trash it, remove it. All right, and the third tool is what they call a trend line. And trend lines, sometimes stocks go kind of in a diagonal fashion, and they kind of follow this, what they call a trend line. So I'll draw it here. You kind of draw it on either tops and connect tops, or draw it on bottoms and connect bottoms. So I'm going to kind of try to connect these tops here because it looks like they're kind of making a pattern here. So you could also click in the black part and hold, and then move your mouse left or right to kind of move the chart around. So this is what's called trend line. You see we hit these tops, and we hit it again, so we could draw this blue trend line. You say, if I own this stock, next time it hits the blue line, I might want to sell because it keeps having problems there. Had resistance, 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 resistance. And we broke out, and we broke back in, and there's resistance again here. So these last maybe for a couple weeks, couple months, these trend lines, but they can be valuable for entries and exits in a more short-term fashion. So you could draw wherever you might think that you could see kind of a pattern, basically. And if ever your chart gets like off into different years and you want it to reset, you just right-click on the black part of the screen and just hit Reset Chart View. You can go back to your 5-year or whatever you want. So let me look at another chart here. You can just kind of eyeball it, see if any trend lines, like this is probably a trend line for this year. You could probably connect these tops or these bottoms. Something like this. So for about a year, this pattern held where every time it touches this blue line, it has trouble. Touch 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 has trouble. And then we enter the bear market. So the trend line can help you with kind of medium to short term patterns you might see. Like I said, you can also do on the bottom, but I don't really see anything on the bottom here. But maybe. But traders do use these trend lines, but they're typically not as powerful. as the horizontal lines. Like we'll put this line at the 2022 top here, 21 top. You could click and move it. Click hold and move it this line if you want to kind of fine tune it. So you see our 2021 top, which is here, was also the bottom of the tariff crash this year. We crashed in early 2025. And where'd they buy it at? Right at that blue line. The previous resistance becomes support. That's kind of the rule of thumb. Resistances, things that make stocks go down, if you could break above them, they become support, like a floor. And vice versa, too. If you have like a bottom somewhere, let's see if I can find one, and the stock goes below it, it'll act as resistance. I don't see that too much on this chart, but some charts have it. All right, so we'll remove that. Click on the blue line, delete it. And before I forget, basically one of the most important things is just what they call a trend. So what you want to see in the chart for a healthy chart is you can kind of look at these candles and they make highs and then they pull back and make lows. What you want to see is a series of higher highs and higher lows. So for example, if we look here, let's see if I could grab like a drawing tool or something, arrow. So here we made a high, then we pulled back, and here we made a low. Here we made a higher high, that's healthy. Here we made a higher low, meaning this low here is higher than this low here. And then so as long as it keeps doing that, higher highs and higher lows, that's healthy. Here we made an equal high. It's kind of indifferent, but we did make a higher low, so that's healthy. Until the stock market's going up. We can keep looking at that higher highs, higher lows. Higher high, higher low. That's what you want to see. Where you get in trouble is you could see at the beginning of the year, here, we made our first lower low here. Okay. We might be in trouble here. Because this low here is lower than this low here. So that's your first kind of warning sign. And then what do? We made a lower high here. So now we have more confidence that we're in trouble. And sure enough, we crashed again and made a lower low here. So what indicator might you have that stocks have bottomed? When you start to make a higher low again. So we got a higher low here. So you can say, okay, maybe I'll give this market the benefit of the doubt because we did make a higher low. And then we made a higher high here. Okay, we're back in trending mode. That's kind of what they just call an uptrend or a downtrend. You want to see higher highs and higher lows. If you don't, it's a warning flag. So I'm going to get rid of all these blue guys. You can also click on the drawings and hit the delete key to get rid of them more quickly. Or you can just click on them and hit this delete box here. So that's a trend. That's pretty important. The other important thing is these lines here, these kind of squiggly lines. They're green and yellow. Those are called moving averages. They're the average price over a certain time period. So if I go to daily chart, you can see the thin green line here. That's the 50-day moving average. Why that's important is there's just people out there and even computers that are programmed to buy at the 50-day moving average. So you can see, I'll draw that, hit the arrow again. They bought a 50-day here. It failed here, but they bought it here. Just means there's going to be a little more buyers than usual at this 50-day moving average. So if we break below it, it's kind of a sign of weakness. In the 50-day, and you can see after this tariff crash here, we recently held it here, the 50-day, just about. And we held it exactly here about a month ago in early October. So the 50-day, this thin green line, That's a pretty valuable tool or marker. The other moving averages are kind of squiggly lines. This yellow one, I'll make the chart a weekly chart. This yellow one is I guess I go back to daily. The yellow one is a 200-day moving average, thin yellow. And that's usually important also. If you get below that, people get real scared. So that's an important level. You can see we came here after we broke below it, which is usually support, the yellow, like it was here, support. We bounced off it. In this instance, in the tariff, we broke below it. That's a bad sign. And then we came back to get above it, and we failed. We got resisted right at the 200-day moving average. So that's a bad sign. So you want to be above this yellow 200-day moving average. The thick green line here right next to it, it's almost the same mathematically, but slightly different. That's a 50-week. So the thick green line is a 50-week moving average. That's like a 1-year average. And it's usually almost the same as a yellow, and it acts kind of the same. Usually in a correction, like a 10% correction, you'll often find support there, like we did in 2023. We came and tested it there and broke below it just for a day or two, and then buyers came in. So that's important. And then in a big bear market where you're down like 20%, you're hoping that the market stops at the thick yellow line. That's an area of support. People buy there. The thick yellow line, it's usually at the bottom. That's the 200-week moving average. And as you can see, the 22 bear market, that was the low. You see we had this little, the tariff crash, we almost hit it. So you really want the market to hold this yellow in a bear market. That means you're going to probably have a 20% correction instead of like a 50% correction. So if we go back in history, here's COVID, and it broke through it. That was really scary, but only for a couple of weeks. If you look at 2019, we held it there. If we go back in time, 2016, we held the yellow 200-week moving average. So it's usually a good place to buy if you're not super afraid. We held it here in 2011, basically. And you can see if we ever get below it, that's a pretty good sign historically that you're in for a deeper market crash. So here's 2008. You see we held it. We held it again, bounced off it, and then we dipped below it. That's a bad sign. We stayed below it. And then we came up and tested it, tried to get back up, and we failed here. That's kind of a big deal. So if you fail there, you get another 30% drop. Same thing happened in the 99 crash. You could see we didn't hold this. Once we break below the yellow, you're kind of in for a deeper trouble. You can't get above it soon. And if you want an earlier warning signal, the 50-week moving average, the green, thick green, that's a pretty good early warning signal. You should basically hold it in a healthy market, like we held it here. The thick green, the 50-week. This is the main one I use. Held it here. Held it here. Didn't hold it here. A scary time in 98. But we held it here. So kind of what I look for. I don't get scared until we go below the thick green 50-week moving average. So you can see in 99, we broke below it here and stayed below it. And to make it worse, we came up here to try to get back above it, and we got rejected right on it. That's often a sign of a bear market coming. So that was a sign of the bear market coming in 2000. And you can see we kept trying to get to it, and we couldn't even get above it. Can't get above it. Can't get above it. Can't get above it. Can't get above it. Once you get above it and stay there for a couple of weeks, that's usually a pretty good sign that the bear market's over. The bear market was over here in June of 2003. You see, ever since then, for a long time, we basically held this green 50-week moving average. Held it. Got scary for a couple weeks, but we held it. A little bit scary, but we held it, that kind of thing. And so we have our warning sign here in 2008. We broke below the green line here. And we didn't just stay there for a week or two. We went significantly below it. And then once again, we came back to test it here. And we got it rejected. That could be a warning sign to take profits or be more conservative in the market. And then we had the big crash. So they don't always work, but they're a fairly decent indicator. These 50-week, the thick green, and the 200-week, the thick yellow. Anything else? I think those are the basics. Those are what you can see. Like I said, you want higher highs and higher lows. You want to basically be above the thick green, the 50-week, or the 200-day, the thin yellow. And in a big bear market crash, it's usually a good idea to buy here on these thick yellows, which is the 200-week moving average. We know how to get tickers. Click up here, type in McDonald's. Did I spell that right? And we want the one that says McDonald's Corp, New York Stock Exchange. And I think that'll do it. All right. Hope this was helpful.